Okay, hump day Q&A. This up here on a different monitor. Merritt, you often refer to speed of tape in your discussion of the market. What specific MGI, when he says MGI, he means market generated information, are you looking at to assess speed of tape? What does high speed tape look like versus low speed? Are you looking more at the rate of volume bar formation, volume over time, the ATR of recent intraday bars, intra-bar volatility, or something else? In what ways does high-speed tape versus low-speed tape affect your trade execution and management decisions? Thank you. Trader Biku is a smart person. Asks great questions. We're very happy to have you in the group here asking these great questions. For me, I believe that the speed of tape, it is only a essentially an intuitive read. So it's not something I have an indicator for, things like that, although I believe it could be done very easily. And I believe that most NADRO can't be turned into an indicator. I believe that speed of tape can. It's essentially volume over time. Perhaps even better for me is the flurry of ticks over time. I'm not even as concerned, just for me personally, could be wrong. There could be a better way to do it with like volume over time. I'm more concerned with what's the buzz? Are we, seeing a lot of upticks, downticks per unit of time? That to me is speed of the tape. Now, a lot of times things go hand in hand with speed of the tape. It's more common when you have a higher speed of the tape that you are going to see that cleaner price action, those moves that are able to not have as much bar to bar overlap and just ramp up. So, there's some causality there and whatnot, but that's to me the metric. It's how much of a frenzy is there on the tape. How fast are we moving between tick to tick? Now, for the intelligence follow-up question to that, in what ways does high speed of the tape, low speed of the tape affect your trade management, your execution, things like that? For NADRO specific trading, there are times where we can, let's say, get away with doing things. For example, let's say we settle into what we call a fast trend, a market that's moving fast enough to where it's actually not giving full imbalance pullbacks to developing value. It's actually holding at the 1.5 or holding above the 2 as it's really got a lot of energy and ramping up. If the speed of the tape component is there, right? We're not just like randomly up at the +2. If the speed of the tape is there, that energy, that frenzy is there, that it gives us a go-ahead, gives me a go-ahead, gives people I teach NADRO a go-ahead to take what we call some fast trend plays, and which is essentially a form of compromise, right? You're taking a poor DVA trade location trade because the speed of the tape and the energy in that market, hopefully you've got narrative at your back to do this as well. But even if it is scalping, the speed of the tape is there to justify that form of aggressiveness, that form of compromise with general NADRO frameworks. So speed of the tape allows us to get away with more. Speed of the tape in terms of trade management. So that was kind of on the entry side. On trade management side, let's talk about low speed of the tape. A lot of times on a low speed of the tape, I will allow some wicks to happen and things like that because things can be a little more herky-jerky, a little more chaotic, a little more less clean and ugly in terms of how that movement goes. So the market kind of asks, hey, you need to give me a little bit more room here because I'm kind of jerky and not smooth and not clean, and there's low energy followed by little bursts of different things. So yeah, great question, and that's hopefully that's helpful for some of that. Yep, the market, you know, and well, let's do a quick update. I'd like to do that. DMI chart is here. And what's happened? Well, you know, I'm glad we got off the stream, because we would have been waiting for nothing, because we were waiting to get down into this area. Was excited for a good long trade here. Was excited for a good short trade if we got below there. What did we do? I guess we front ran weekly imbalance, I guess, you know. We were unable to sustain below 10K, but that happened too high in terms of price for me to trade it, right? I was looking for us to get down into this lower extreme. I talked about seeing that 10K failure, like right here, and I wanted to trade that, but from down here. So the fact that we get up here, oh, look, you know, I could have taken 2 holds above 41 at this point, but neither of those makes sense with regard to DVA. This morning, it made sense to go for it, especially initially with a form of imbalance to the market, right? Now we're drifting up into that area with weak buying overall. I know contextually we didn't hold below 10K, but it's not really strong buying. We haven't taken back nearly what we sold off. We're not nearly back to zero even, right? So there's nothing really to do. Nothing really to do. You know, maybe into the close, if, you know, we've got kind of this micro poor high GH period. If we really keep breaking through here and maybe the tape finds something, that speed of the tape is there, you know, I'd be happy to look for that trade above 41 to get us to 55. But yeah, not much to report in terms of midday update. The market was extremely difficult and stuck in the mud and crazy little dropouts in order flow when we did have meaningful, you know, decent trade opportunity. And then as it started to come into a place to potentially give us the best trade of the week so far from a contextual perspective, it didn't give it up. It didn't give us the trade. It didn't get there. So it's kind of the theme for the week, unfortunately, but you know, this is real life. Fab says 10:16 Eastern. Why did you go long there? From a pure natural perspective, I can't see a long. Okay, I do see a scalp up to develop value high with delta neutral and running stops on the lows. But pure natural wise, we're back in the CVA, clearly accepting inside ETH DVA. I'd expect a traversal of DVA at that point, at least reaching VWAP. So let's take a look. While I sneeze. Excuse me. Bring the screen share back up. 10:16 is 9:16 my time. Okay. I get it. I absolutely get it. So let's just get an arrow here where he's talking about. So let's go back to the DMI chart real quick. Okay, and we essentially need to change the tick size today because it's that bad. Let's go from 6 to like 4. You could probably go to 3. Okay. So this was during B period. Okay. And where is the acceptance picture relative? So we knew we were bullish, and we knew if we were accepting above 41 on the DMI per our pre-market prep, we wanted to be looking for longs there. That doesn't take away from your points yet. We'll get to them, but I just want to start with the idea. I want to start with our pre-market plans and what we wanted to do. So obviously you understand this long, right? And perhaps a reentry or whatever, because at that point we would call it imbalanced up very cleanly, clearly, you know. There could be an argument made that we weren't technically imbalanced up there for that first entry, but let's call it imbalanced up. So at this point in time, where is VWAP? So let's see what the intraday condition is. So VWAP, I'm just going to ballpark it. Yes, I don't have VWAP on this chart because I don't really use VWAP itself. Just kind of getting my bearings about me. So yeah, that's pretty accurate, maybe a little lower. So did we get halfway to VWAP? And the answer is yes. Why do I ask, did we get halfway to VWAP? Because that is typically where if you get a rotation that breaches halfway to VWAP, you're probably, in terms of current market condition intraday, right? We're probably rotational. And I said that when I took that long. I said, we're compromised in terms of condition with the DVA, which is why I wanted to what? I wanted to respect that. I wanted to take my scale out in case we did this and this, right? Turns out we couldn't even get there. So I took a scale out because ain't nobody buying it. And I made a fantastic decision to do that at the hard right edge. So that addresses your point around DVA, that we'd gone rotational. I totally agree. Do I always trade with perfect use of DVA? No, I don't. Here's the rationale that I had at that time. So first and foremost, the acceptance picture relative to 41 is perfectly fine. There's no issue, right, with taking this trade. This movement and rhythm has accepted above this level, and this is just a pullback to this area. Did this area here need to have a stop run done to it? We were lamenting about that for an hour, right? It needed a stop run. We finally got that stop run. So to me, I'm waiting DVA condition versus a price action, lack of excess at the low, need to run stops. And I'm saying, what's kind of more important to me in this moment? And this was such a balance and such a crappy low that was just lethargic and needed to have some excess. Like we talked about, we needed to go lower before we could go higher. So that dynamic that developed during that sequence became more important to me than trading with perfect DVA usage. So I took a compromise on DVA. I had delta neutral at my back, right? I had the spring pattern there. And I had my essentially hypo one, right? Like, because this would occur potentially before this, right? So chronologically. So I had the trade that I wanted before the market opened. I had a pattern excess that had formed at the low. I had order flow at my back. I had rhythm, had my narrative, had the acceptance picture. I just didn't have DVA. That's it. So great question. I love it. Regarding the CVA, that you're mistaken about. You said, Nadro-wise, we are back in the CVA. That's incorrect. We may have gone below it a little bit, but the only thing that the way you need to see that movement is forget, I'm going to cover up the price action as much as I can. Okay. And here's the level in question. This is not below the level, right? Here's the hard right edge. It's not below the level. Technically, it's a few ticks below the level, but that's not how we read levels, is it? Another question from Fab is, in the NADRO course, you're not really teaching RTH-DVA time-based. I think it's a little bit in the Q&As. I'm wondering if I should incorporate RTH-DVA into my trading time frame. How do you use it? I heard you talking about confluence, which should not be used in this context, I believe. Of the extremes of RTH-DVA and ETH-DVA, any other things to look for? I'm worried to get more conflicting information. And you should be worried, okay? So it depends on where you are in your development. When I have newer students trying to put all the tools together and trying to figure it out, I essentially tell them to trade like this, right? Perhaps even this. Let's forget yearly, quarterly, right? Monthly, weekly CVA, a little bit for daily TPO if you want, and one trading time frame. I tell people to simplify that way. The more advanced you get, the more you can say, well, what is ETH doing versus what is RTH doing? And how can I handle ultimately conflict, dissonance, and sometimes confluence, things like that. So there's all kinds of ways we can use it, right? So at one point, I think, yes. So during this sequence here, when I took a couple of the attempts at getting long, RTH VWAP was holding, right? We really weren't able to get and sustain anything below RTH VWAP. I commented during this section here that we were kind of holding imbalance down at this point on the RTH. You know, without having anything on the ETH right here at this transition, what do we get on RTH? Well, we get a shift to rotational, right? At this point in time right here, what do we have? Well, we have kind of a confluence of upper extreme of ETH and upper 1.5 extreme of RTH, right? So those are all kinds of areas where there's like a little bit of confluence that you can use to take some of these trades. For this trade right here that was in question a moment ago by you, that sounded like a diss or something. It's not. It's just saying, per your previous question, this spot right here, which was not a good trade location, as you pointed out with ETH, guess what it was? It was a perfect trade location with RTH. This is a nice little wick of the -2 lower extreme. There's no better place to be long a DVA than that type of lower extreme, given that we're not in an established imbalance, right? Which we weren't. This is just a rotational extreme. So that's probably some great info for you there around. Now, first and foremost, let's not overcomplicate things. Let's not try to put too much on your plate too soon. So your fear or worry, as you put it, is smart. You need to be worried about putting too much on your plate at once. Keep it simple. Pick either ETH or RTH and use it exclusively. And then as you progress, and I know that's a ambiguous term, but as you progress, you can start to add more complexity to your narrative read. You can add more complexity to your intraday condition read and things like that. Melanovel says, thanks for the lessons, Merritt. First question, yesterday on the last trade long into the close, what guided your scale outs? How did that fit into your goal for the day? Great question. Let's turn on our fills. So I want to scale out in 3 different pieces. Let me try to remember everything that happened here. The first scale out, this is a good little rhythm rotation that starts to turn. Order flow starts to turn right in front of 10K. So this is, oh, it was also into the dissonant weekly imbalance pullback right there. Okay. So I wanted to respect the weekly. I got a rhythm rotation, and the momentum started to turn. The order flow started to turn. Obviously, my fill was very good at the moment that just began before the sellers really piled in. I was one of the first out the door there. The next piece was essentially the trade thesis was to take the third piece off, the final piece off, into the next structural area per the DMI, right? My prep, per the full traversal of the DVA. We have a lot of freaking acronyms, don't we? So I feel sorry for you guys, beginners. But what happened is there's 7 minutes, 6 minutes and 45 seconds left in the session. And we again get to 10K, and we again start to see a turn in sellers. And we're more than halfway to that target. There's only a few minutes left. I teach this all the time. There are times, pun intended, where time matters, especially things like we're coming into the close. When you're coming into the close, you're literally against the clock. You're running out of time for decent market movement. Now, granted, look at how it moved after we closed. Okay, but that's not normal. Okay. Look at how much more I could have made or whatever. That's just amateur garbage. I chose to exit because I felt like how much time had passed and how the market generated information, AKA we weren't getting through 10K and we're getting rejected again. And by the way, I believe this is an upper extreme of RTH. Yes, we touched RTH developing value high right there to the tick. I don't need to be more greedy for the next 6 minutes of the session to squeeze out a little bit more profits, risking giving back all of them. So that's a great question, because that is an atypical management right there. Unless the idea was just to scalp across RTH DVA. So yeah. And your second question, I've noticed that most traders tend to have days when they say, I'm not trading today because I can see myself, well, I guess that means like because whatever reason, for example, I can see myself deciding not to trade in a market like today. You, on the other hand, tend to wait for narratives rather than deciding based on conditions to not trade. Is this a correct observation? If not, are there days you decide not to trade at all, and what do they look like? Many thanks. So I'll be honest, I don't fully understand. Merit tends to wait for narratives rather than deciding based on conditions. So to me, the narrative or lack thereof is one of the biggest conditions that's there for us. Perhaps you are referring to what I call short-term conditions, right? Yeah, so you have narrative, contextual condition, and short-term conditions. So we'll take it that way. Yeah, it's true that I don't let short-term conditions keep me from trading at all. I do let them tamper my aggressiveness. So if I've got a narrative I really want to trade, and the short-term conditions are really crappy like they were after the open today, you won't see me be as aggressive. You won't see me take as many re-entries. You'll see me take some more conservative scale outs that I don't even really want to take, but it's like, man, that's all I can get here. You'll see that type of adjustments that I make. But no, what do days look like where I'm not going to trade at all? One, they might be something going on with me, my health, my wellness, my tiredness, energy levels, emotional upsetness, whatever, right? That might be a reason not to trade. And another reason might be not to trade would be, like I said earlier, where I don't really have a great narrative. We're nowhere near touching those trade locations. And we'd need some kind of major contextual shift to give me something great. And the short-term conditions suck. And I know that the market is waiting on the Fed to come out, 4 hours from now or tomorrow or whatever. I might not do anything. Another complication to this answer is that I will scalp from time to time. So I will just take, if we get some decent order flow, some decent movement, I'll do things that don't necessarily relate to a narrative read. I can take some scalps without a narrative read. I can take some scalps even against a narrative read at times. Bruce says, I'm very new. What is AMG when you speak of AMG graduates? It's AGM, and that's our advanced group mentoring. So you can see about that on the site. The general progression of our students or people who want to learn from us or want to trade for us or whatever, right? Maybe you're a rock star, you go right into the tryout, you pass it, and you're on the desk. That's more rare, right? I think a lot of people most traders aren't there yet, right? So most people, maybe they try the tryout, maybe they don't do so well, then they say, let me learn, right? Let me humble myself and be a student. And so they'll take the NADRO course. Couple months under the belt, NADRO course, maybe up to a year. Get your feet about you, start to learn what's what, interact with the community. And then maybe you plateau, maybe you start to see some success, maybe you are really still struggling. Well, now how about some insight into what you're doing, from me? And that's mentoring, right? We take it from, okay, let me just word vomit all the topics for you, and you learn in a course format, to let's see what you're doing. Let's see what your process is that you're developing. Let's see what kind of mistakes you're making. Let's assess your mental framework, as I hear you talk about and review your work and everything like that. Let's get you some feedback as to what you're doing. It's a big deal. I used to just mentor anybody. I don't do that anymore. I only mentor people who are speaking NADRO language, right? So that's what advanced group mentoring is. It's more advanced than just the course. It's the next kind of level of things. And we ask that you understand the lingo and the terminology and things before you enter into that. Intensives are just almost like a bonus, right? Intensives are, rather than merit focusing on the student, let's focus on merit, right? That's what the intensives are. Let's see what he does, how he thinks about things. And you do get some mentoring, which is what this Q&A session is, right? It's essentially mentoring. Yeah, so anyways, that is that. Lovicenzo says, when you say we trade areas, not lines, how precise can we be? Example, is it okay to take the IPB on the weekly, even if we don't reach that point, but support by DVA, ETH, or RTH? To answer the second part of the question, yes, right? It doesn't have to be perfect, but it needs to be close. So your question is, how close is close enough? It's a difficult thing to answer, but let me try with kind of a blank chart for you. I'll just draw. It doesn't matter what this is that I'm about to draw. This could be a CVA. Okay. It could be weekly DVA, right? Doesn't matter. Here's a value area representing some time frame. Could be yesterday, could be last year, could be the developing quarter. Okay, it doesn't matter. But what matters is relativity when we're talking about areas, not lines. How wide is this? And I'm not asking you to be a quant with this. I'm trying to tell you a basic eyeball framework for logic that I tend to use. If it's that wide, I might use something like this around the area, okay? So what is that? Well, let's see. So if it's that wide, let's transpose that to like here. Okay, so that's 1, 2, 3. I hope I'm keeping this consistent. 4, let's call it 5. Okay, I know it's a little less than 5. Let's call it 5. So it's 20%. This area that I'm using as good enough, close enough, whether it's a retracement that's coming in to test it there, whether it's a retracement that's going through it to test it there, right? The area rather than the line, roughly 20%. And I might give you a different answer on this on a different day. Okay, so this is just like off the top of my head because it's not the way I operate. I don't work quantitatively with this thing, but I'm just trying to give you something that like is similar to the way I see it, the way I think about it. So 20%, it's a garbage number. Don't worry about 20%, okay? But in general, so just to continue with the example, if we had holy smokes, if we had an area, let's call that a CVA, that's this wide, okay, on the same scale as this first drawing, okay, everything's to scale. Guess what? This much of an area is too big. It's too big. This isn't anywhere near close enough to that to use that as the same area. It needs to be something like this, right? Which is probably going to fall into that kind of 20% deal that I just said. Maybe I did come up with a good rule of thumb just now. I don't know. But that is the logic. It needs to be an area around a level that is relative to the width of the value area that we're discussing. Because I don't have a reference that's not a value area. Think about that. I don't have a single reference that I lean on that's not value derived. Great question. Another great question, it looks like, from Jake here. How do you think market replay is best utilized? As of right now, I retrade previous days before doing my prep. Do you think I'd be better off trading random days as I often do on the weekends? Does it make sense to focus on the previous day, correct any errors you made in execution? You could do all of those things, okay? And I like I used to do the same thing. Weekend work was like, let's add another day in terms of a random day. I don't know what it traded like. I have no memory of it. I don't even know where it is, what it is. Let's get a good repetition in of doing what I need to do. On the other hand, you can replay sequences that you found difficult, that you made key errors, things like that. It could be a great part of your morning routine to do that, or afternoons. You can do it in areas where, for example, like right now, I have no interest in trading the S&P, so I could do some replay work, right? You can do it in between trades. You can set alerts and it can notify you if it's there or whatever. I'd use like a different instance of Sierra for that in case there's any complications with where the replay price is versus where real prices are. One of the best ways to use replay is to do it in a way that you set out to work on something specific. So for example, I was a tennis player growing up, very serious about it. And so, when you go to the practice arena versus a match, you're probably going to work on something specific. It's probably something that maybe your coach or you or a parent has noticed that is a weakness that you're making mistakes on or whatever. And so, for example, one of the harder shots for a lot of tennis player is a high backhand, right? Maybe your high backhand opponents are seeing that you suck at high backhands, and so they're hitting a high topspin shot to that side of the court. So you're sitting here fighting off these high backhands all day, and they're coming to the net and crushing you or whatever because your replies are weak. Maybe I'm going too deep into tennis tactics, but the point remains, maybe the market is hurting you in some way because the market has identified that you suck at that. Not really, but you get the analogy. Market replay is best used as a way to drill something specific, to try to get better at something that you've identified or your coach has identified that you need to get better at. Right? So there's all kinds of skills that you might need to improve upon. There's all kinds of sequences that perhaps give you trouble. You might need to practice sitting with the feeling of being in an open P&L and not moving your stop to break even. If you can't even do that in replay, you're sure as heck not going to be able to do it in live. So I think market replay is best used at number one, drilling specific skills or tactics or whatever. Number two, at getting more reps of doing your full process from prep to trading on random days that you don't know what the outcome is, right? Not just like replay an earlier sequence in the session or replay the prior day. Random days. Great question. Batoli Merritt, could you elaborate a bit on what you mean by fake cumulative delta divergence? What's meant by that? Could you talk a bit about the significance of delta 0 and 10,000? So I guess obviously you're not a NADRO student, but we'll talk about it a little bit. False divergence is the term that I use. So here is price and here is delta. If price does this and delta does, let's see, I need it to look like it's absorption. We might say that the sellers are really pushing hard in terms of delta. Delta's lower than where we began, right? Price is higher. So someone might look at this and say, well, there's absorption, right? Someone did this actually on, I think, yesterday or the day before. And I pointed out to them that it wasn't the case. What's actually going on here is that there's actually no buying from this point to this point, right? There's no buying there. And then there's actually a quite normal amount of selling when we go down in price, and delta has some sellers that push it down, right? And then again, we see a nice move in price from point A to B, not coupled with decent movement in delta. So someone might say that these aggressive sellers are being absorbed, when in reality, the sellers are quite normal. The sellers are just pushing when we have pullbacks lower in price. It's actually a problem on the buyer's side. So that would be a false divergence. People do the very basic, let's compare these two swing lows relative to these two swing lows. And if price is higher, but delta is lower, they would say that, you know, there's absorption of sellers or whatever. And that's not the case. That would be a false divergence read based on what I'm telling. 0 and 10K and whatnot, those are just levels that myself and others have observed over time that the market tends to, a decent amount of the time, nothing's perfect all the time, have reactions from, and it can be telling whether or not we hold above or below those levels. That's all it is. Why that happens, I don't know. Neutral is something I could explain, as a kind of an inventory reset. 10K, good luck. That's just algo world. I don't know. I don't know why it works. But we talk at length about those in the course and whatnot. Fat Cat says, do you sit here all day or do you take mini breaks? When do you feel it's a good time to just play golf and not even trade anymore? Trading endurance can be tough and it's easy to sit here and get complacent. Yeah, all true stuff. First of all, let me give you some context. I have whatever the opposite of attention deficit disorder is. I am not typical. I can lock in, forget to eat, forget to go to the bathroom. I have no other needs than this like mental activity in front of me. I don't even drink water, right? Just like locked in. In fact, I'm better about that when I'm on camera and stuff because I'm a little bit more aware of myself. So you guys have seen me take some breaks, get up, get some more to drink, do different things. That's probably more movement and activity than I'm used to during trading sessions. So that's just some context for you about me personally. Okay. So whether I sit there all day or take mini breaks, it really depends on a lot of factors. One, first and foremost, what kind of opportunity sets and conditions are we dealing with? If the market is, it's 2020 and OPEC is going to crush crude oil and the world's falling apart and we're going limit down and different things. I mean, I'm not really taking many breaks and I am active, trading. That's an extreme case, but there's been times last week where we had a really nice bull narrative and I was very active in trading and whatnot. And then there's times like today on the other end of the spectrum where it's miserable. We had a decent opportunity, like B- or C+ kind of to get involved this morning from 41. Really stuck with it, but wasn't willing to lose a ton on it or whatever. So that's a day where I'm going to take some breaks. You see me with the long quiet periods where I have nothing to say on the webcast, stuff like that. That's a day where I might go to the driving range. Obviously I have other responsibilities and stuff too. So it's not just, my days are not just about my trading. I have traders. I am monitoring the risk of those traders. I have a mentoring class to do twice a week, right? I have regular running a business, stuff to do. Ryan needs me on this or that, whatever, right? So I have other stuff that I'm doing as well. It's not, I've made a choice, not to just be a trader alone. I want to run a prop desk and I have an education arm to that. And so I have a lot of other stuff that I do as well. But in terms of just the trading and like whether or not I'm trading or let's call it taking a break or working on other things, it really depends on conditions, opportunity sets. I'll cancel meetings. I have canceled, even if you sign up for advanced group mentoring, just know that if I'm on a heater trading and it's crazy good conditions, I might cancel our meeting. I might reschedule that meeting because my trading and my desk traders are the priority, right? You may not like that, but if you think about it long enough, you're going to like it because that's who you want to be working with is people with that kind of priority versus people who don't actually trade, don't actually work with other successful traders, and they just want your money and they want to work with you, right? So anyways, we're getting off topic. Breaks can be important for different reasons too. So let's talk about a different component of that. This is a really actually in-depth talk here. There's kind of more than meets the eye to this. What about me and my performance forget the opportunity set, whether it's quiet and dull or exciting and a lot of opportunity. What if I'm crap in the bed, right? What if I'm not getting my acceptance read right like I did yesterday? What if I'm making serious mistakes and find myself very frustrated, on tilt, whatever the case may be? There is a recipe for a break, a mandatory break. I went through a long time in my trading where a part of my risk plan was built in check-ins and breaks because I was so bad at controlling my risk and controlling myself, if you will, at least being aware of myself to the point where I could make conscious decisions to do better. Breaks were a critical component of what I was doing. It's more rare now that I need a break because I'm making terrible mistakes and I'm pissed off at the market or whatever. It happens from time to time, but I promise you, it's pretty rare. My mental framework is just so much better than it used to be. I'm not perfect. You guys have seen that up close and personal this week. But it's pretty good, and it's way better than I was years ago. So yeah, great question. Hopefully some of that is helpful, something you haven't heard before, maybe. Yeah, I don't know if that's the fat cat or someone else that likes the term fat cat. I don't know. Balance Trader says both AMG and AGM are powerful. Mercedes AMG pun. Very nice. I've done AGM and I hope to get an AMG in the near future. That's good. I like that. Some time ago, you tweeted about market dynamics had shifted. Can you expand on this? Pulling up tweets from November 21st. Let's see what I said. Buyers aren't even allowing it to go lower, and then it brings a new dynamic where an aggressive participant or algo sees the great liquidity and then pours into it for as much as they can. Now we've entirely changed the energy dynamic. And who is this nerd talking here? I can't even understand it. Inventory dynamic short term. Either these new change style participants are either clueless or perhaps they found some edge in the disruption of the natural order. I don't know. Maybe it's a new dynamic with thinner liquidity. Large players have to step in early to get as much size on as they need to because there simply isn't enough during the quick grab lower like there used to be. Buyers aren't even, I wish I could see the post before this one. Buyers aren't even allowing it to go lower. And then a seller sees that the liquidity's there and they slam it. Okay, I'm with you, Merritt. Now we've entirely changed the energy dynamic. Okay. And inventory dynamic. So what I'm essentially saying is that it's a hypothesis that we're seeing more passively driven participation in markets than we used to. And I think my hypothesis for that at that time was, well, maybe because markets are thinner now, the S&P, I haven't looked at a dome in a long time, but back in the day, it had thousands of contracts at every level. I bet it doesn't today. Somebody give me in the chat, what's like a normal liquidity level in the S&P these days? Maybe 200 or 300? What is it? I guess I could pull up a dome in about 5 seconds and not be a jerk and make you guys tell me. Yeah, 200 to 300. Maybe even 100. So yeah, I mean, I kid you not, back when I was trading the S&P back in the day, you know, I'm not like Anthony Credelli trading the S&P back in the day. I'm not that old, but back in 2012, okay, you're talking 1,500 contracts at every level, you know. It was a different beast. things are different now. So the point is that, well, maybe now you still got big, huge funds out there that need to move billions. How are they going to do that effectively? Well, now they're opportunists. They need to wait to see, oh, look, there's some liquidity. Slam it with our algo as long as the other algo refills or whatever, right? Slam it, slam it, slam it for everything you can. And then when it's not there, we stop participating. And the opposite could even be true. I guess there you go, second iteration of that. We know that there's a aggressive sell algo. Let's put in our passive algo because we're trying to get filled, right? And so you end up with delta that goes down while price goes up. And it's a different energy dynamic. Used to be, and still is for the most part, but it used to be that a much higher percentage of days simply followed the aggressive activity is what moved the market. More aggressive buyers, market's typically going higher. Even today, as we came into the open with NASDAQ, we saw delta lower with price higher, right? It doesn't happen that way every day, but a lot of times it does. So that is my additional musing and expansion on that tweet. Hope it makes sense. Trader says, anyone have a playlist or something for someone who wants to switch to Sierra? There's an old video that I did years ago floating around. I'd be interested. You guys could tell me if you feel like that video is now outdated. It might be because Sierra has had some changes from when I did that video 8-9 years ago. But it might still be helpful. I should try to do another one some point, but I'm sure there's other people out there who've done good videos on running you through the Sierra, because Sierra has a learning curve that's steep, but it's worth it. And I'm not a fan of a lot of Sierra things, okay? But in terms of a trading platform and the flexibility it gives you, and you can make it your own and you can do whatever your heart desires with it, there's nothing else. There's nothing else better. And it's even cheaper, right? It's a good product. Okay, we're almost at an hour here. Any final questions before we wrap it up? Some great conversations here today. Edward says some Axia videos are decent for Sierra intro. We have a Sierra thread within our community here, if you're a NADRO student, and we've got some wizards. They can really help you with questions, but a beginner intro, my video is still, I would think, is still pretty good in terms of like, all right, you have a brand new instance of Sierra. Here's some settings that I like to change. Here's how you get things set up, back adjusted charts, all that good stuff. All right, guys. Good questions as usual. We will see y'all for the review session this afternoon. Take care.